Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's quickly pull up what the Nifty is doing. Absolutely flat in trade as we speak. It's been a directionless day, if I can call it that. We were in the green briefly. Thereafter, we again slipped into the red. And now we've bounced back higher, but absolutely flat. 25, 790, 930, 940, largely maintained. And the band is also very, very narrow. You look at the band in which we're trading at, 25,974 being the top, 25,879 being the bottom. So very, very narrow 100 odd point band that we're trading in. Let's talk about some stocks which are buzzing in trade within the Nifty 50 space. Shriram Finance, Tata Steel for a second straight day, by the way, Hindalco, JSW Steel. That's the tilt of the market, and it's moving fairly quickly as well. Some of these were not gainers at the start of the day or midway through the day. So you saw Shriram Finance is up 2.5%, Tata Steel, Hindalco, Axis Bank 1.7%, and has been up pretty much all through the day today. There you go, except for that initial, yeah, absolutely. Axis Bank has been up all through the day today. You're seeing M&M as well, 1.6% higher. Bajaj Auto is 1.5% higher as well. So you've got quite a few gainers. Advanced decline is in favor of the declines though. And Max Health is the one which is down around 2.5%+. Eternal is down 2% odd. Apollo Hospitals, Interglobe, SBI Life are just some of the culprits in trade today. Flat though on the Nifty. The Nifty IT index is down around 1/3%. The Nifty Bank though doing fairly well for itself, around 1/5% higher on the Nifty Bank. And within that banking pack, it is Axis Bank and AU Small which are leading the charge. 2% higher on an AU Small Finance, 1.7 higher on an Axis. Then you have PNB, Federal Bank, Bank of Baroda, some of the PSU banks coming back and finding some favor. And along with it is a Federal Bank as well. So doing fairly okay for itself, Federal Bank in trade today. In terms of the broader markets, there too we've seen, again, the trade largely will mirror the Nifty 50. When you're looking at the Nifty mid-cap as well, there you go. But we're not seeing that last-ditch recovery that we saw on the Nifty. So we're not seeing that recovery on the Nifty mid-cap index. The Nifty small-cap, let's pull that one up as well. Maybe get a pulse of how that one is playing out. There you go. No hint of a recovery. It's in fact just been one way sideways since that push downwards that we saw. In fact, let's go across to Rabinder. He's got all of the stocks on which are buzzing on the back of news in trade today. Rabinder, what do you have for us?
Well, as Shriram Finance is in focus, where CARE updates credit rating for NCD and subordinate debt worth around 2,500 crore from CARE AA plus stable to CARE AAA stable. So back of this upgrade, Shriram Finance is in focus and the stock is up around 2%. And Toro Healthcare is also in focus in today's trading session, where on the back of the bulk deal, where small cap world fund INC has sold approximately 23 lakh shares worth at rupees 950 per share, and whereas ICICI Prudential Mutual Fund has bought approximately 22 lakh shares at 950 per share, and the combined transaction value was around 415 crore. QPD is also in focus, where board has approved setting up new FMCG manufacturing plant in Saudi Arabia, and this is to support the expansion and market penetration in the GCC region. And Sham Metallics is also in focus, where company's step-down subsidiary of the company has commissioned its modern blast furnace along with the linear steamer plant and started commercial production. So back of this stock is also in focus. Eternal is under pressure, where Blinkit CFO Vipin Kapuria has resigned 18 months after joining quick commerce company Blinkit. So back of this, Eternal is under pressure. Silpa Medical is also under pressure, where the stock is down around 2%, where Delhi High Court has restrained its subsidiary from selling and manufacturing one of its drugs. And Indocount industry is buzzing on the back of the positive brokerage note, where Aventus Spark has come out with a note, and they have initiated coverage with buy rating and target price of ₹348, which implies a potential upside of 33.7% as compared to previous closing price. So back of this bullish note, Indocount industry is in focus and the stock is up more than 11%. Petronet LNG is also in buzzing on the back of the bullish note, where Investec has maintained the buy rating with target price rupees 400. They say that the Petronet now trade below its historical valuation band, offering an attractive entry point. And lastly, Muthoot Finance is also in focus on the back of the brokerage note, where Morgan Stanley has maintained their overweight rating and high target price rupees 4,385 as compared to earlier target price rupees 4,050. They say that the gold loan growth is estimated at 17.5% on a sequential basis in Q3 FY26. So back of this bullish note, Muthoot Finance is also in focus.
Okay, thank you so much, Rabinder. And by the way, that's a very solid list of stocks that you've put together. So thanks for that. And you've got all of those stocks which are buzzing. You want to keep those on your radar. We will discuss some of those as well. The very interesting one which I found, which we flagged off in the morning, was Entero Healthcare. ICICI Prudential has picked up a stake in Entero Healthcare. 400 odd crore is what Rabinder spoke about. He spoke about Small Cap World Fund Inc. selling and ICICI Prudential Mutual Fund buying. That stock is doing very well for itself. In fact, if you pull up the stock chart, it's up 6% in trade today, 6.2%. Muted start, but thereafter the pickup has been very, very solid. But that's, of course, on Entero. Before we take the conversation forward, let me bring on board Kunal Bothra as well to join this conversation. Kunal, the index itself, let's first talk about that. Flat, as you had suggested this morning. What next? What should the trigger point be? What should the move be? Can we continue to expect this kind of a market even tomorrow? Directionless, right?
Yeah, it's pure directionless, and I think one of the reasons which you flagged off at the start, the small cap index being negative, so it tells you that the market breadth is not supportive.
Yes.
Now, when you don't have the market breadth being on the supportive side, it's very difficult to preempt that large caps by itself will try and make a comeback, because most of the large cap names which we are looking at, even, for example, the sectors like private sector banking names or even large cap names like L&T, Reliance, they've actually gone sideways for themselves. The only two performing sectors so far in the last, I would say 3 or 4 weeks have been the Nifty IT and the Nifty Metal Index. Nifty Metal Index, in fact, today is doing extremely well. So I think that's the only pocket which I would believe that one could probably concentrate on. But my sense is that the only change which has happened so far in the last 3 days is that slight rise in the India VIX from 9.2 to 9.758 levels. Now this tells you that the markets are gearing up for some sort of a potential break from this consolidative range. Which side the markets break out or break down, I think that's something which we'll probably keep an eye on. But I would believe that if the India VIX crosses the levels of 10 to 10.5, very high probability that we'll come out of this 400-500 point grinding range.
Okay, 10.5 on the India VIX. Okay, all right. Currently at 9.7, by the way, is what the India VIX is currently placed at. Let's look at some sectors also, Kunal. The Nifty PSU Bank is the other one which is in focus, 1.4% higher, showing some resilience in this market, some kind of a move, if I can call it that, in an otherwise directionless market, and all the constituents sitting in the green. In fact, SBI is trading up around 0.9 odd %. And that is the bottom or the lowest gainer on the Nifty PSU Bank today, which means that you've seen the kind of strength that you're seeing across the board. What next for this one, and what are your top picks?
Yeah, so I think, in fact, Canara Bank was one of the picks which I mentioned in the morning, because my expectation was that PSU banking stocks have actually come back towards a very attractive territory. And, after a 10% broad correction for many of the PSU banking names, it's a very attractive point, because they've been the performing sectors for the last 3 or 4 months, and there comes a point when the sector goes into a mild correction, a mean reversion. But then I think at a 10%, it is a very lucrative risk reward to go for a buy. So bullish on SBI, bullish on Canara Bank, in few of the other PSU banking names which you've been highlighting time and again. In terms of individual picks, I'll go with 2 buy calls. The first one is about AB Capital, stock trading at 349, 350 levels thereabouts, so it looks extremely attractive. So look out for 360 as a near-term target, stop loss at 344. And the second is you can't miss out on the middle pack. So Jindal Steel is something which is breaking out after weeks of underperformance. The stock coming out of a trendline breakout on the daily chart. So would look out for targets in the range of 1055 and stop loss at 1000.
Okay, you cleaned up both my questions, Kunal. But very, very quickly, how quickly do you expect that 10% upside on a Can Bank on an SBI?
I think it should happen potentially in the next 1 to 1.5 odd month.
1 to 1.5 months, 10% viewers. Okay, shifting focus though, Nifty indices, they're going to see a quarterly and semi-annual rebalancing today. This will obviously trigger passive flows across large, mid, small cap stocks. Stocks like a Bharti Airtel, Indigo are set for inflows. Infosys, Reliance may see outflows. The Nifty Bank rejig also points to sharp reallocation within the banking heavyweights. Ashesha joins us with what to expect in terms of flows.
Well, yes, quarterly and semi-annual rejig for broader indices is expected to happen today. That is the 30th of December. So let's talk about individual stocks from each of these indices which are expected to see inflows and outflows in the last hour of trade today. First up, from the Nifty pack, Bharti Airtel. This, of course, is Nuvama's estimate, where Bharti Airtel could see an inflow of about 58 million US dollars from the Nifty 50 pack, followed by Eternal, Indigo, M&M and HDFC Bank, which could see inflows anywhere between 8 to 29 million US dollars. This is expected to happen in the last hour of trade. As far as other companies are concerned, where weightage could decrease, this list includes the likes of Infosys, Adani Ports, Reliance Industries, HCL Tech and Bajaj Finance, which could see outflows anywhere between 3 to 77 million US dollars. Let's shift focus to the broader markets then. And as far as Nifty mid-cap index is concerned, Swiggy could see inflows of about 7 million US dollars, followed by Paytm at 2 million US dollars. We have Maharashtra Bank and 361, which are expected to see inflows of a marginal 1 million US dollar. Nifty mid-cap stocks are expected to see an increase in weightage. This includes the likes of Swiggy, Paytm, Maharashtra Bank and 361. However, for Swiggy, Zomato, some other stocks, weightage is also expected to decline. So need to keep an eye out on all of these stocks. Shifting focus to the Nifty banking index then, where Yes Bank and Union Bank are likely to get added, and hence they could see inflows of about 35 to 32 million US dollars, and several stocks could see an increase in weightage, the likes of Federal Bank, IDFC First Bank, PNB, IndusInd Bank and AU Small Finance Bank. So yes, a whole host of counters from across passive funds, whether it is mid-cap, small-cap or banking index, are expected to see some inflows or outflows on account of both quarterly rejig as well as semi-annual rejig, which is expected to happen today.
Okay, thank you so much for that, Ashesha. Kunal, AU Small Finance, that's the other buzzer in trade today. And because we were covering PSU banks, let me also try and cover private banks here. Any names on your list, and AU in particular?
Yeah, I think that's one of the more performing stock for the last 3 months. This quarter the stock is up some 30-35% plus. Compare this with the first quarter, or I think the mid quarter, where the stock had moved up from 540 levels to 750. So it tells you that the last 3 odd quarters or 8-9 months approximately, the stock has been doing exceptionally well, trading at a lifetime highs, close to that 1,000 mark for AU Small Finance Bank. That I believe could be a very interesting chart. So which means it indicates that medium-term dips into the stock price could be taken as a buying opportunity, because the long-term trend is on the upside. But from the other private sector banking names today, there is another breakout which is happening. That's on the charts for Axis Bank. The stock breaking past about 1230, 1240 barrier, which was a resistance of sorts for the last 1.5 odd week, and especially after the sell-off, the stock had shown that single day 5% odd correction for Axis Bank. The stock is trying to make a strong comeback today. So that I believe could be another interesting chart. So my sense is that if the stock holds on to this 1230 levels, we could be looking at 1280 to even potential 1300 for the stock in the near term.
1280 to 1300 on an axis. So those are some of the picks coming in from the private banking space thick and fast. But let's shift focus. The new policy that the Department of Telecommunications has released and will be implemented from today. Charu's here with all of the details with regard to this one. Charu, what can you tell us?
The Department of Telecommunication has released a new policy framework that will be implemented from 30th December 2025, that is today. What they have done is that they have essentially taken some steps demarcating the spectrum available for radio waves, and have also taken steps to enhance the connectivity for 5G, 6G future technology, as well as maritime connectivity and connectivity during air travel as well. Now, if we look at the numbers, the plan covers radio frequencies that start from 8.3 kilohertz to about 3000 gigahertz. Now, this is going to help as a reference for the government officials who deal with what happens with the radio spectrum. Apart from that, it will also help a lot of new manufacturers in the space to sort of develop devices which can work in this particular spectrum. Now, coming on to the expansion of DOT's allocated spectrum for 5G, which will also be usable for 6G future technology. New frequency band from 6,425 to 7,125 megahertz has been identified. Now, this is going to enhance the connectivity for 5G and also will be readily able to support the future 6G technology. They have also taken steps to enhance the connectivity, as we mentioned earlier, for maritime and air travel.
Okay, thank you so much for that, Charu. And Kunal, with regard to Bharti Airtel, now on charts, we've seen a bit of a pause actually in terms of a move here. How is it looking and what are the levels you're looking for?
Just about a couple of days back when the stock was at 2150 levels, it started to see some bit of mild correction. I would say mild because a 2% correction for Bharti Airtel in that context would be very, very mild as compared to the kind of uptrend the stock has shown. But then the data on the F&O side indicated that there was some bit of reduction in terms of the open interest for Bharti Airtel, which means possibly that if in case today's data still indicates that the OI drops for Bharti Airtel, we could be looking at the stock going through a patch of a consolidation. So my sense is if the OI reduces for Bharti Airtel, we could be looking at 2050, 2150, this 100-point range as a near-term range for Bharti Airtel for a good part of the month of January.
Okay, some wonderful movers, viewers. Hindustan Copper is up 8%, Hunasa Consumer is up 7%, Intero Health is up 6.5%, JBM Auto is up 6%, Cupid is up 5%, Nazara Tech is up 4%, Choice International is up 3%. There's plenty of movers in this market, even though it's a directionless Nifty 50 index. But what we'll do is take a pause on this show, slip into a very short break, come back and continue to talk stocks on the other side of this break. Stay with us. Welcome back, and we're joined in conversation with Sudeep Bandyopadhyay. He's market expert, of course. And Sudeep, how are you viewing markets? How has 2025 been for you? And what are your maybe top bets or top sectors or top stocks that you're looking for in 2026?
Well, Harsh, I think 2025 has definitely been a bit disappointing for overall Indian capital markets. When 2025 started, nobody expected this kind of a market. We have seen relentless selling by FIIs. Of course, domestic inflows were quite strong and the market held. We did see all-time highs, but corrected also sharply. So I think we were in a range and we continued to hover in that range. So returns haven't been anything great. Small cap, mid cap has been definitely disappointing. Large cap has given some returns, but also in selectively. As far as 2026 is concerned, we are pretty hopeful. The time correction, which all of us, many of us at least, have been talking about, definitely has happened. So valuations do look better compared to when we started 2025. And that gives us a ray of hope. Also, the corporate results have started improving, and we believe that Q3 and Q4 will be even better compared to Q2. And that should add further momentum and to the multiples which we have now. Having said that, I think the return of FIIs is probably a prerequisite for the market to sustain at a significantly higher levels from here on. But Indian markets will continue to chug along in the positive territory in 2026. That's our belief. We have GDP growth possibility of anywhere between 7 to 8%. Add to that the inflation target which RBI has, which is around 3 to 4%. So we were looking at anywhere between 11 to 12% nominal GDP growth. I mean, that is what the central bank and the government will be looking at. And they need to do work for that, because nominal GDP has also come down sharply because inflation is down sharply. But assuming that we get back to 11 to 12% nominal GDP growth, a carefully curated portfolio should give you 15% plus return. That's what our belief is. And we believe that 2026 will again be a market where the stock picking skills will be required. And we have to very carefully select the sectors as well as companies in the sectors to generate the alpha.
Interesting. Okay. Let me also try and quiz you, Sudeep, with regard to how you're viewing broader markets, because we've seen an underperformance there. And do you believe that 2026 will largely be an earnings revival cycle? And will markets actually factor the earnings revival much prior to the earnings actually kicking in?
Well, Harsh, that always happens. Market definitely will try and factor in quite a bit of the future and start, valuing companies accordingly. That's par for the course. We have to expect that. There are multiple sectors where valuation expectations have started building up. I can talk about, consumer durables, automobiles, FMCG. I think all these sectors we are seeing the green shoots. The consumption numbers for expected numbers for December are being talked about, and we believe that the demand has been robust for both consumer durable as well as FMCG, and this is pretty much on expected lines. Jan, Feb, March should also be good, so the Q4 should also be good. So yes, there should be earnings revival as far as some of these sectors are concerned.
Okay, let's shift focus to India's general insurance industry. It's set to appoint chief executive health at General Insurance Council in a decisive push to curb health insurance fraud and streamline hospital insurer relationships as well. Anurag Shah joins in with this exclusive.
Industry body of general insurance companies, that is GI Council, is all set to appoint Chief Executive Health at GI Council, and this appointment mainly is in focus for to drive the common empanelment process, which is a single agreement between hospital and all insurance companies, and to crack down hard on the fraudulent claims, because presently insurance industry is suffering from fraudulent claims, and there is an estimate of around 3,000 to 5,000 crores of fraudulent claims, claim outgo is happening every year, and which is impacting insurance industry. So keeping all this in view, GI Council is going to appoint a Chief Executive Health at the industry body. The focus will be on the common empanelment process and to curb the fraudulent claims. And in last year, we have also seen that relationship, the friction between hospitals and insurance companies also. So to make that process also smoothen, in keeping in these objective, industry body is going to appoint a new chief executive health at the GI Council level. So going ahead, industry is hopeful that if they are able to curb the fraudulent claims, so it will be beneficial for the policy holders also, because health insurance premium increases due to the fraudulent claims. So going ahead, a lot of action we'll see in health insurance space.
Okay, thank you so much for that, Anurag. How best do you play insurance, Sudeep? You've seen GST being removed from insurance, and therefore you might well see an uptick with regard to the demand for insurance. How best do you play? Do you play through something like a platform company like PB Fintech? Do you play through some of the general and health insurers? How best?
Well, I think, our number one pick in the entire insurance space is LIC at this stage. Look, the sheer valuation advantage which LIC enjoys vis-a-vis private peers is significant. We believe the scope in the future is huge. And, we have talked about this a number of times. The whole industry talks about low insurance penetration and the opportunity which exists for significant scale up for the insurance companies. LIC has been doing its bit. It has lost some market share to private peers, but still holding on and coming up with interesting products. If you talk about the specific company ratios, I think they still lag behind some of the private peers. But I think the valuation gap is even larger. And considering everything, we believe the scope for generating incremental return by buying into an insurance share would be as far as in LIC at this stage. We also like the health insurance place, because again, this is one space where we believe the opportunity is significant, and the real challenge is the fraud and prevention of the fraud and things like that. But again, the penetration level has to go up significantly. So the health insurance piece and standalone health insurers definitely deserve a look. There are challenges and there are performance issues in some of the health insurance companies, but we do like Star Health from a long-term perspective.
Okay, right, Sudeep. That's with regard to Star Health. 445 rupees per share on charts, a percent higher in trade today. What we'll do is we'll slip into another very short break. Stay with us here on ET Now. We'll continue to talk stocks on the other side. Welcome back, and what's a company in the Nifty is making a big pivot. Titan, it's making a big pivot by opening its first store focused on lab-grown diamonds in Mumbai. The company has launched a new brand, Beyond, as it looks to diversify into an emerging segment driven by younger consumers, Gen Z and millennials. Anjali Palod is standing by to get us an exclusive look at the store.
Right, so we are here at the Beyond store, the first of its kind from the house of Titan, marking its official entry into the lab-grown segment. Now, this store is located in Andheri in Mumbai, which is the first store that has been launched by Titan for the brand. But like the company has mentioned that they are going to be looking at other stores as well. Let's take a look at what's on display here. As you can see, these are all the collections that include lab-grown diamonds, and there are different kinds of jewelry pieces available here, a wide range of collection. You have earrings as well as some neck pieces as well as pendants, and what we can see as far as the interiors of the store go, it's quite modern, and as opposed to the much more extravagant and lavish version of Tanishq, which is right opposite the road. This one has a much more modern look and feel. Right behind me is also the rings section. The company has said that they are also doing small customization in terms of sizing as well as of now, but it is largely a retail store that looks at lab-grown diamonds and the different kind of jewelry collections that the company has come out with the launch of this new brand. Now, the store also has a gold purity testing machine at the back, as a lot of the collection includes gold along with lab-grown diamonds. So there's a machine right at the back. There is also a small experience zone for the consumers where they can sit, have a sip of coffee while they browse through the collections of the lab-grown diamonds here, which is also a nice little modern addition to a jewelry store that we don't see very often. Now, over here, you can see the bracelets division. So all the kinds of bracelets that are made using lab-grown diamonds are on display here. And let me take you through one of the most interesting parts of this store, which is where they show exactly how a lab-grown diamond is made. A small education zone is what they call it. So here they show the process of how for a lab-grown diamond it goes from a seed to the final block, and then it is cut into a diamond. So the entire process is being shown over here. So this is the first store from the house of Titan for its brand new brand, which is Beyond, and the plan is to open more such stores. But this is a testament to the growing popularity of lab-grown diamonds, like you said, amongst millennials, Gen Zs, and the younger consumers.
Okay, Anjali, thanks for taking us through that walkabout of Titan's brand new store for their LGD category in Andheri, which is opened in Mumbai. Yes, very interesting. Interestingly, Anjali pointed out that there is a lot of gold too in the store, and why this is because that the all the jewelry, all the lab gold diamonds diamond that has been set has been done on gold, which is very different from from Trent's existing lab-grown diamond offering called POM, wherein they're setting all of their gemstones on top of silver. So that is the key difference between the offerings of both of these brands, and this is what differentiates both of them, since they both belong to the house of Tata. But Nuvama also says that they visited the store and they say that the median price is around 40 to 50,000 rupees per item. They have an inventory of about 850 items, and because the median price is between 40 and 50,000, the overall inventory in the store as of now is 4 crore bucks, and categories range all the way from 4,000 to 4 lakh rupees. So these are some of the brokerage reactions that we're getting on Titan's first store in the LGD segment. Nuvama continues to maintain a buy, target price of 4,672. You also have the Morgan Stanley note that's talking about this purity tester machine, because Tanishq has also launched the Tanishq Diamond Expertise Center, and they believe that this is going to enhance the confidence that the customers have on the offerings from Tanishq. So Morgan Stanley continues to remain overweight, price target at 4,062 rupees per share. Just to put things into context, when we had this store announcement happening, you had a note coming in from Citi wherein they said that the new brand is not expected to add any incremental value to Titan's growth plans and their earnings as well. And that is in fact the sentiment that Nuvama is also sharing as well. They say that while this is positive, they've not incorporated the format in the financials. It's too early for a numeric assessment is what they're saying. So that's the different brokerage reactions coming in on Titan's newest stock. Let's get a chart check on this one as well. We have Shivangi Sarda from Motilal Oswal Financial Services joining us on the show. Shivangi, hi, good afternoon, and good to be chatting with you again. Before we get a holistic market view from you, talk to us about how you think Titan is shaping up on the charts. A roughly 20% move on a year-to-date basis. What's your take here?
Very good afternoon, Sneh. Thank you for having me. So we've seen that Titan has been one of the strongest counters, and this is in fact a portfolio stock. Of lately, we've seen a lot of good volumes adding here as well from the last 3 sessions. Even though price is not reflecting much of a follow-up, but then the volumes are showing that buying interest is intact. On a year-on-year basis, this stock is moved by more than 23%, which has actually outperformed the other counters in the same sector. It has been trading in an upward sloping channel and has been making higher top, higher bottom from the last 9 years. So, of course, one of the strongest counters and still holding momentum at the higher levels. On an immediate basis, we are looking, quite positive for Titan, as we can see good amount of rollovers rolling in as well. And ahead of the, festival and wedding season, we see a lot of action here as well. So on an immediate basis, we are expecting the stock to go up around 4150 levels. And on a positional basis, we could look at 4250 zones.
Okay. All right. And Shivangi, generally with regard to markets, how do you see the Nifty 50 and what's the index indicating to you maybe for the rest of the week? Today, of course, being expiry day, but how do you see the rest of the week? There's not much of a move. It's been quite sluggish per se.
Yes, absolutely, Harsh. So we've seen that market participants are actually celebrating the new year. And there has, volumes have been slightly thin in this week. And we've seen that the index is kind of facing some profit booking. But then again, the support-based buying has been strong. So equal pressure from both the sides. Even though there has been, a fall in the put-call ratio, we are, looking at the put writers who are still holding on to the base, even though the call writers have shifted their base slightly downwards. So overall, Nifty index is likely to remain in a very tight range for the next, week. Of course, today we are seeing a lot of swings within a consolidative band because of the expiry. But then again, overall, India VIX has sunk below the single-digit level. So the option premiums are kind of squeezing in, which is causing little difficulty for the option buyers. So overall, we are looking at 26,000 as the next make or break zone here. If it manages to cross these levels, then we could revisit the recent highs of 26,200, or else we could see some weakness towards 25,800 mark. This is the take for Nifty.
Interesting. Kunal, if I can come to you with regard to Shriram Finance. Now, there was a rating upgrade there, first likely of many. I will come to Sudeep with regard to an opinion with regard to that rating upgrade. But on charts, how is this one looking?
It's looking excellent, and in fact, even after 4 straight months of the stock moving up higher, and remember, I think from sub 500, sub 600 levels, 575 is where the move started off for Shriram Finance, towards the point when the stock is now knocking towards a 4-digit mark for the first time ever. So I think in that sense, it's been a spectacular move for the stock in the last 4 months, and still looks like that the stock is ready to go for much more on the higher side, because the volumes this month has been on the much higher side as compared to the previous 3 months of volumes for Shriram Finance. So that tells you that there has been fresh take of buyers, which has happened to the stock at current levels. So it looks attractive. Generally, these are the kind of stocks which show very strong performance on a quarterly basis, going to the next year. So my belief is that potentially for the next year, we could be looking at least another 10 to 15% upside for the stock from current levels.
Okay, looking good. In fact, 10 to 15% higher levels on a stock that is already up 50% in the last 3 months. So seems like that rally for Shriram is going to continue. But Sudeep, good afternoon. What's your take on Shriram Finance? Fundamentally, how does the company seem? Today, the stock is doing well because CARE Ratings has upgraded the stock from CARE AA plus to CARE AAA plus stable now. What's your take on the confidence that this credit rating shows, and what is this going to do to the company's cost of funds?
Well, definitely, this is a welcome move, and it was on the expected lines. The company has done pretty much everything which they were expected of doing: incremental fundraise and rapid loan growth. Also, in a falling interest rate scenario, the NBFCs benefit more than proportionately in the first phase of that journey when the interest rate starts coming down. And Shriram Finance is definitely a beneficiary of the falling interest rates. Credit demand has picked up, and that's again good news for Shriram Finance. The margins do look robust, and there is scope for further improvement in the margins. Valuation, as far as valuation is concerned, I think we have seen a larger part of the rally already getting played out. There may be a little bit of upside even from current levels, but I don't expect any major upside from the current levels. Whatever had to happen as far as the stock price is concerned is by and large done.
Okay, so that's the take on Shriram Finance. But talking about this entire NBFC basket, Sudeep, what's been your take there? Because names like L&T Finance have done very well in the year gone by. Overall, the pack seems to have done well. Would NBFCs be your preferred pick when it comes to the entire financials basket, or would you prefer PSU banks or private banks for that matter?
Well, as I just said, look, when the interest rate starts coming down in the economy, the first companies to benefit are the NBFCs, because the transmission of rate reduction is much slower in a NBFC compared to banks. Banks immediately face the margin squeeze, which is what we have been seeing getting played out as far as banks are concerned. But for the NBFCs, there is scope for incremental margin, and on top of that, lower interest rates attract incremental credit demand, which is what they are benefiting from. So, that's pretty much got played out in terms of valuation of all these leading NBFCs, whose asset quality also had improved significantly from what it was a few years back. So, yes, they did well. But if I have to look at the future, I think I will go for PSU banks. Look, there is a significant valuation advantage. Look at a Bajaj Finance. I mean, it's done well. It's a fantastic company. But look at the valuation at which it trades. It's about a 6-time book, plus 6-time plus of book it trades at. Whereas if you look at SBI, it trades at 1.1 time book. So there is a significant gap. I'm not comparing. These are not apple-to-apple comparison. But the fact remains that the valuation gap is glaring, and the opportunity sitting on PSU banks is humongous. Of course, SBI is a good buy at current level. You can look at some of the smaller PSU banks as well, and we do like Bank of Maharashtra, we do like Central Bank, and many other PSU banks, because of the sheer valuation upside, which we believe will get crystallized at some stage in 2026.
Okay, now I'll just switch focus here. ET now has exclusively accessed a Form 483 issued by the US FDA to Dr. Reddy's Laboratories. Now, it's for their plant in Andhra Pradesh. The observations followed a pre-approval inspection and flags gaps in, flags gaps with regard to specific investigations, process controls, cleaning validation and sampling practices. Srishti joins in with all of the details on this one.
Well, yes, ET now has exclusively accessed the Form 483 that was issued to Dr. Reddy's for their Srikakulam plant, where the inspection was done in this particular month itself, wherein US FDA issued a Form 483 along with 5 observations to Dr. Reddy's. Here are the following observations that we get to know. The first observation is actually with respect to out of specification, and that seems to be the most severe one, wherein they say that there has been a failure to thoroughly review any unexplained discrepancy, wherein US FDA has flagged inadequate investigation of the out of specification results, wherein the root cause was not conclusively identified before invalidating the OOS and releasing the batches. The second observation relates to FDA observing lack of validated control procedures of manufacturing process, wherein equipment changes were made without the reclassification. This seems to be a bit more procedural in nature. Even so, the third one, wherein cleaning and maintenance procedures were not adequately established. But the fourth observation does relate to testing, wherein US FDA flags off that testing and release practices do not ensure full conformity to final specifications. And lastly, with respect to the fifth observations for their Srikakulam plant, US FDA has said that there were written procedures, they were not followed for sampling of the drug substance. So out of these 5, the most severe one seems to be the OOS, that is out of specification, when US FDA has flagged failure to thoroughly review any unexplained discrepancy, and that's what ET now has accessed exclusively, the Form 483 along with 5 observations issued to Dr. Reddy's Srikakulam plant. Back to you.
Okay, Shrishti, thanks so much for taking us through that. So that's the take on Dr. Reddy's and the Form 483 observations that have been issued, and that stock is slightly under pressure, about 0.1% close, absolutely flat, in fact, not doing all that much. Shivangi, your take on some of the pharma names on a year-to-date basis. It's Glenmark, Torrent that have seen Torrent has not done all that well. Glenmark and Torrent have seen some moves. Lotus Labs has done very well. What is your take on some of these names on the charts?
So looking at the pharma names, of course, these have been, slightly volatile and high beta counters. But overall, we've seen that the selective pharma and diagnostic space stocks have done good. Now, Glenmark, if we look at a monthly basis, it is giving a Poland flag pattern formation breakout. But then again, we've seen some bit of slack and called writers who are present at the 2100 zones. So there is, the upside still remains a little capped, even though the volumes are adding up. So support is strong at these levels. Now, if we have to talk about the other pharma names, we can see that good action can be seen, in the diagnostic space stocks. So one could look at stocks like Lotus Labs or Apollo Hospital for that matter. Lotus Labs has actually outperformed in the entire space, and even on a year-on-year basis, it has moved more than 82% on an YTD basis. So overall, this has been one of the most stronger counters, and my focus would be here for it to continue to outperform. And the next levels that we're looking at for Lotus Labs is 1150 zones.
Okay, so that sounds good. On that note, viewers, we'll slip into a very short break. Be right back and talk more about some of the stocks and how the market is shaping up. More importantly, how the market is expected to shape up for the rest of the week on the other side of this break.
All right, welcome back and thanks for staying with us here on ET Now. One of the big buzzers of the day is Hindustan Copper. Let's pull that stock up 8% higher, and it's been, one, to a certain extent volatile, but two, it continues to move higher, at least in terms of direction. It's given a near 60% return in nearly the last 1 month. Shivangi, are you bullish with regard to a Hind Copper? What next for this one?
Of course, metal have, been shining, and especially as we close 2025, we've seen a lot of action here in this entire pack. Now, if we talk about copper, of course, this has been one of the metals which has been on radar for a lot of people, and Hindustan Copper especially has done quite well because on a yearly basis, we've seen a rounding bottom formation. So clearly, there has been good amounts of attempts of recovery that has been made here. It has moved by more than 100% this year. So, of course, there is a lot of momentum that has driven this stock. We've seen that from the last 3 days, volumes have been higher than the average, and RSI is also showing positive signs here. Of course, we've recouped the losses of the previous session, and positionally looks quite good. If we have to take a call, immediate basis 550 would be the next targets that we're looking at for Hindustan Copper with a support of 518 levels.
Sudeep, do you have a view with regard to a Hind Copper, and how do you view this surge? Of course, it's linked to the metal itself, but how much of it is linked? Because copper clearly hasn't doubled in this year, whereas Hindustan Copper has doubled in terms of the stock price. So how should one look at this or analyze it?
Well, I think I strongly believe that there is I won't call it super cycle, but definitely a positive momentum as far as the overall metal category is concerned. Look at aluminum, look at zinc, look at silver, look at gold, look at copper. I think we have seen surge in demand, genuine demand. I'm not talking about the metal prices or stock prices of related companies. Genuine surge in demand across the world. Now, this has led to obviously metal prices going up and the related company stock prices also going up. We also believe that this momentum will continue for probably the next couple of years, and this will lead to related companies also gaining in terms of valuation. So yes, Hind Copper has moved more than proportionately as far as share price is concerned, but I don't think we have any big worry about sudden crash in the share price or something like that. We believe that it may not show the kind of return it did show in 2025, but it will continue to give decent return in 26 as well. The same goes for Hindustan Zinc as well. Obviously that's the only silver manufacturing company in the country, and that's the only proxy for silver. So it will also continue to give good return. We also need to look at aluminium because, again, we believe that the aluminium prices globally will remain robust for next couple of years. So, the aluminium-related companies, the companies which are into aluminium, will definitely continue to show robust performance going forward as well.
Okay, so that's the take on some of the metal names. We've seen a very good rally in silver and gold, and corresponding metals, base metals have also done very well. But just shifting focus, I want to touch upon the air traffic numbers that we've received for the month of November. Of course, all of this data is from wires and agencies. We have numbers from Air India. Their market share has grown nominally. Indigo, from the listed space, the market share has gone down at 63.6% compared to 65.6% in October. So yes, month-on-month numbers for the month of November this is. Akasa Air has, yes, reduced. SpiceJet, once again from the listed group of companies, market share has increased at 3.7% compared to 2.6%. So if we just pull up the chart of SpiceJet, we've seen a very sharp uptick in that stock price, a 2.5% jump on the stock right now, a few minutes ago, ever since we've heard this announcement. So that's the numbers coming in. Kunal, any chart check on Interglobe Aviation and SpiceJet? SpiceJet as a stock we haven't spoken about in quite some time.
Yeah, and I think Interglobe Aviation, I would believe at 5,000 odd levels, looks to be a stock which I think has factored all the negatives which were priced into the stock, I think, at the start of the month of December. So that major correction for the stock, I think, is now behind, and we are looking at a point where potentially Interglobe Aviation could probably have formed a near to medium term bottom. What matters over here is that whether the stock holds on to that 4,600 levels in the near term support. I think if that happens for Interglobe Aviation, we would be looking at the stock trying to form bottom and then go into a gradual process of consolidation first and then a pickup of trend. So risk reward wise, attractive to buy Interglobe Aviation at current levels, especially from a medium term perspective. SpiceJet, on the other hand, the long term charts have still been very negative. Now we look at this on a quarterly basis, we look at this on the monthly charts, it's still trading with a fair degree of a negative bias. I think till yesterday or day before, the stock was on the verge of breaking below its previous YTD lows. So that itself indicates that the charts on the overall pattern has been very weak. The stock has to give strong breakouts, especially above the major hurdle zone, which is closer to 35 to 40 range for SpiceJet. So only a break above those levels is where we can expect that a medium term to long term recovery could start to shape up.
Okay, all right. So that's of course with regard to some of the aviation counters. But very quickly, Sudeep, do you have a view on any of the aviation stocks? Do you like an Interglobe, a SpiceJet, or the like?
No, I don't like any of them.
Any of them?
Even Interglobe, I would like to avoid. There are a lot of challenges, including regulatory issues, which Interglobe will face over the next few months, and I will definitely like to stay away from these counters.
Okay, staying away from the aviation pack, including the market leader Indigo, is the word coming in from Sudeep. Sudeep, thanks so much for joining us. Wishing you and yours a very happy new year. Thanks so much. Okay, viewers, let's move on then and welcome on board Rajat Sharma from Sana Securities. He's joining us once again on the fundamentals. Rajat, good to be speaking with you. Overall, we've spoken about where the markets are headed, where they seem to be headed. It's been a tight range, at least in the near past and the near term gone by. Metals have done well, yes, on a year-to-date basis. It's auto stocks that have also done well after that. PSU banks, financial services banks. This is basically the crux of the market that has done well. Let's talk about the ones that have not done well. Something like a Nifty Realty or an IT, for instance. Do you see the tides changing for some of these sectors as we step into 2026?
Yeah, absolutely. I think for IT, we're very, very positive. I have recently added a few stocks in the IT space to my portfolio. The reason why IT has not done well, I think, has a lot to do with what's happening in the US, both in terms of the tariffs, although that does not affect the service sector directly. But what you keep hearing about a hike in the fee of US H-1B visas, because a lot of Indian tech companies rely on that visa category. So there's a negative sentiment around IT companies. And we all know that companies like Infosys and TCS, and in fact, even in the mid-cap segment of IT space, a lot of these companies get a majority of their revenue, 63 to 83% for large IT companies, comes from the US. And even the revenue which comes from other parts of the world is US dollar denominated. So, that's the reason why these companies, you look at the valuations of an Infosys or TCS, they're trading at, close to their historic lows. And, any upside in terms of revenue should augur very well for these companies. Keep in mind, when dollar is where it is, when dollar appreciates and reaches, 10, 15, 20% appreciation in a year, that is very good news for these companies because they earn a lot of their money. In fact, most of their money in US dollars. So that's, on one side, you have very low valuations, and on the other side, you have dollar appreciating. So it's just a matter of time before things settle down in terms of tariffs and trade with the US. I think IT is definitely a sector which you should all add to your portfolio, both large cap IT, and I've added a couple of small IT stocks to my portfolio.
Okay, so that's on IT. But that is just to prod a little bit ahead. It's interesting that you're turning bullish on IT. Is it the larger end of the IT basket that's looking good? Or do you believe the mid-caps now look more attractive? We've heard that big acquisition announcement from Coforge. What is your take on which segment within IT are you focusing on right now?
So, there's two segments here. One is the legacy businesses, and Infosys is one of my favorite stocks. Today it's trading at a price where its dividend yield has jumped over 2.2% or so. So, as these companies adopt to artificial intelligence, these companies should do well. Infosys in particular, a lot of cash on its books. They can make acquisitions as they adopt artificial intelligence. And as, the tide turns, even if it starts trading at the multiple at which it used to trade, we are then talking about a 20% upside immediately from here. So I think to that extent, I find at the current price, the stock to be trading 20% lower than where it should trade. But the interesting stocks that I've added in my portfolio are, there's a company, Intellect Design Arena. That's a company which is changing the very base on which, banking softwares work, because right now they all work on Finacle. So they're trying to change by developing the core banking system, the core operating system on which banking platforms work, because banks are the biggest clients of these IT companies. Right now, a lot of banks use Finacle. Now, that's such an old technology that, to embed the new age artificial intelligence tools on that platform is very difficult. So, what they're doing with eMash, which is the core product they're developing, they're making a core banking system which would be attuned to embedding a lot of new age artificial intelligence tools on that. So when you talk to your RM or when you feed in any details or you meet someone at your bank, everything gets captured, and then there's a laser GPI which reads into all of this. So the bank will know a lot more about you than you would know. Right now the stock is trading quite expensive in terms of valuations. Not very expensive, 45-50 is not very expensive for an IT company. But if they succeed in this and they get a few big orders, they've already got one from a big Canadian bank, then these are the growth companies that I'm betting on. So at one end, I say I'm buying something like an Infosys, and on the other, I'm buying these mid-cap companies which are developing a lot more, products which will help adapt to AI. Because creating AI like US companies have done is one thing, and to model on them and create something for the future based on that technology is quite another. And I think Indian IT companies should do very well in that space going forward.
Okay, so that's on Indian IT. And you did say Intellect Design is a stock you like. Shivangi will come to you with a chart check on that. Before that, the news flashing on the bottom of the screen. BL Kashyap, they've bagged an order worth 364 crore rupees from ESNP Property Builders. The stock is doing very well. Let's pull up BL Kashyap and see what the stock reaction has been. It was up about 3.25% on the back of this news flow. And yes, 3.5%, so sharp spike after this order win. But Shivangi, coming to you, Rajat spoke about Intellect Design. This is a stock that has done absolutely nothing on the charts, but in the last 6 months, a 17% drop. Year to date, absolutely flat. What's your reading on the charts? Are you seeing some turnaround over here?
So see, looking at Intellect, we've seen that on a month-on-month basis, it has actually wiped off the entire gains of the last roughly 3 months, and we've seen that this stock has been actually moving in a very, staggered manner. It has broken all its immediate exponential moving averages as well, and even though it was trading at a higher levels, the momentum was clearly missing because the stock wasn't being able to sustain at the higher zones. So overall, this stock is not showing any signs of immediate recovery. It is near its support zones. It could consolidate for a bit. But the clearly missing factor is the buying interest that has to emerge for it to again regain strength.
Okay, all right. What we'll do is we'll slip into a very short break and we'll continue conversation on the other side. Stay with us.
in association.
Back with closing trades, and we're talking about some stocks that are in focus today, and Honasa Consumer is one of them. Sharp spike in the stock today after we understand that the promoter Varun Alag has bought about 0.57% equity in the company, summing up to about 50 crore rupees. So that is renewing some confidence back in the stock. Yes, that stock has simmered down from the day's highest point. At one point it was as high as 7 to 8%. Nonetheless, a 5.5% uptick on the stock right now. Shivangi, a chart check on Honasa Consumer, and let's stack it up with a Nykaa. How are you reading both of these names?
So looking at Honasa Consumer, this stock has actually been very volatile. We've seen that, clearly it hasn't been able to sustain much at the higher levels despite the kind of price action that we've seen in today's session. Even earlier, we've seen that it did made attempts of, crossing around about 300 levels on 13 November, but it failed to do so. So 1300 would be an important hurdle to watch out for this stock. And, it will continue to be there till the time it crosses and holds above these levels. Now, looking at a Nykaa, of course, this stock has done quite well as compared to the last 2 years where it had actually not delivered much. YTD basis, it has moved by more than 60%, and we've seen that there has been good amount of recovery, and it has respected its 50 daily exponential moving average. And currently, the amount of price volume that we're seeing is quite remarkable. We are looking at a next 275 for Nika with a stop of 260 zone.
Okay. Rajat, I wonder if you have a view on any of these platform companies, including a Honasa. Even let me also throw in some of the fintechs here, Paytm or PB Fintech. Any of these that you're liking?
Yeah, Paytm as a stock, I think things have changed for them now that, they have integrated their clients with a payments bank again using different banks' APIs. And keep in mind that Paytm, I think, makes a lot of their revenue now from third-party product sales, whether it's credit cards or disbursement of loans. And with the kind of reach they have, I wouldn't be surprised because I've always said that the future of financial services will belong to companies which have a huge reach in terms of distribution, which is why I don't even differentiate between banks and NBFCs, or for that matter, these fintech companies. I'm actually quite positive on Paytm. I've recommended it. I have it in a few client portfolios where the risk appetite is higher. As a disclaimer, I don't own it myself, but a few of my clients do. I'm very positive that their revenue will keep rising quarter on quarter as their distribution keeps bringing them more money. So Paytm as a stock at 1300 rupees is something I like.
That's the take on Paytm. Interestingly, we've spoken about Nykaa. We've now touched upon Paytm. And these are some of the companies that had seen absolutely flat listings. Yes, they picked up some steam from there, but Paytm still continues to be around 12 to 15% lower than its listing price. But while we're talking about listings, India's IPO market stayed busy in 2025 with 103 main board listings and 270 SME issues as well, raising a combined 5.39 lakh crore rupees over the past 5 years. While marquee issues like Tata Capital saw muted listing gains, strong performances from names like LG Electronics, you had Meesho, they kept investor interest alive. So let's do a little bit of a roundup and try and understand how the 2025 look like for the primary market, and more importantly, what is in store for 2026. Ishika is here with the lineup of some of the most exciting IPOs lined up in the year to come. Ishika.
Definitely. So this year was a very robust year for IPOs in the primary markets in particular. Now, yes, there were over 103 main board IPOs, and some of the most prominent IPOs included Tata Capital, the largest issue, right? 15,500 crores of fundraise, and it, however, it listed at a discount of rupees 1%, a muted listing. We also have Grow and Pine Labs, some newer names in the lot, followed by Lenskart, and we also have well-established companies such as ICICI Prudential AMC listing this year at a premium of 20%. Now, talking about some of the strongest performers since their IPOs this year, we have Aditya Infotech, Stallion India Fluorochemicals, Ether Energy, Meesho, as well as Jain Resource Recycling Limited, right? And talking about the losers this year post IPOs, we have companies such as Glottis Limited, Gem Aromatics, BMW Ventures, as well as Aris Infra Solutions Limited. Now, they are down 30 to 50% post IPO listing, as you can see. So right here on the screen, we have VMS TMT down 51%, Gem Aromatics down 49%, Aris Infra down 37%, right? So these are some of the losers since IPO listing. And talking about next year, 2026, we have some good names coming to the primary markets to collect. Names such as Hero FinCorp, they're expected to raise over 1,200 crores. We also have Hero Motors, they are expected to raise over 2,100 crores, and other good well-known names such as Kent RO, Oyo, Boat, Snapdeal, Fab India as well, and Zepto, PhonePe. So I think it would be a good year for IPOs next year as well, and we are expected to raise funds over 3.5 to 4 lakh crore through primary markets in 2026.
Okay, so that's the take coming in with regard to IPOs. Rajat, let me ask you with regard to consumer and consumer discretionary in particular. Any of those themes that you're liking, and how are you playing those themes?
By consumer discretionaries, if I were to include FMCG in that, then that's one segment that, I really like. There's a couple of stocks which we've increased our allocation to, one being Hindustan Unilever, and the other one is Asian Paints. But, if I just may, because since you were talking about Tata Capital, I will give this as a disclosure, and I'll tell you this. Tata Capital is a big part of my holding now and a big part of the holding of a lot of my clients as well. And this is one stock which I think people are not realizing how cheap they're getting it. If you go by the price to earnings multiple of the stock, it would match to its, main competitor, which is Bajaj Finance. But keep in mind, Tata Capital has a humongous advantage when it comes to NBFCs in this space versus its peers. First, they have they don't even need any external companies to lend money to. Their own group companies, whether it's a lot of these Tata listed companies, Tata Steel, Tata Chemical, Tata Consumer, a lot of these Tata companies, they can keep extending loans to. The other thing is, you will see a lot of new revenue lines being added into Tata Capital. I said this when the company got listed, because the mandate was to list Tata Sons. What they've actually done is they've carved out Tata Capital and listed that as a separate NBFC and said this is the upper layer NBFC, not Tata Sons. So with time, you'll see a lot of the businesses from Tata Sons, the financial services business, will keep getting added into Tata Capital. This will happen. It's a very, very good stock to buy at this price. And again, just like Paytm, they've got their APIs with, they've got some 250 players who have websites and who have a lot of reach, where they can just integrate their API into their travel agency, and they provide end-to-end solution on a website, from loans for travel, loans for home, loans for everything. You just do your KYC and everything is integrated into Tata Capital. So very, very positive on this stock. So coming back to your question on consumer discretionaries, I'm very positive in FMCG space. It's gone nowhere for the last 1, 2, 3 years, I think. Now with the GST rate cuts, I think, you can start feeling it. Now, it's when you buy something which is FMCG driven, you realize that the prices have come down substantially. So two stocks that we've added, one is HUL and the other is Asian Paints. We've increased our allocation to that. I think it's only a matter of time that this new competition, which is making a dent into Asian Paints, will not be able to compete with it, as Asian Paints keep dipping its margins for the existing distributors, which they're doing, and there's a fight going on around that. Keep in mind, Asian Paints has not lost any market share. They were still 50% plus of the total paints market 3 years back. They're still 50% plus today. You've had a lot of these Opus and JSW Paints and a lot of these paint companies come, but there's margin pressures, but they've not lost market share at all. So these are the two stocks that I really like in this space.
Looking good on the consumption front. HUL and Asian Paints have made it to the radar. But let's refocus once again. Exclusive sources tell ET Now that listings of state power distribution companies are set to gain momentum as the Ministry of Power is pushing next generation power sector reforms. Prakash Priyadarshi is joining us with all of these reforms, what they could be and all the finer details. Prakash.
Well, we are learning that the listing of state power distribution companies likely to gather momentum in 2026, as the Power Ministry has asked them to speed up the process for DISCOM listings under next generation power sector reform. So very significant development coming in. In fact, Power Ministry has also sought details on the progress made so far on DISCOM listings. In fact, the ministry has also urged states to list at least one DISCOM in a time-bound manner. Along with that, at least 5 states gearing up for listing of their DISCOMs by financial year 2027. In fact, states like Andhra Pradesh, Gujarat, Chhattisgarh, Haryana and Maharashtra have already started the process, and Andhra Pradesh and Gujarat have finalized merchant bankers for IPOs, whereas states like Haryana and Chhattisgarh likely to file DRHP soon. In fact, the government wants DISCOMs to be listed on exchanges to ensure better governance and stable capital flow. However, Power Ministry is not in favor of bailout for loss-making DISCOMs.
Okay, thank you so much for that, Prakash. Let's pull up the Nifty Bank and you'll see what I'm seeing. 0.5% higher now on the Nifty Bank. So we've gone from strength to strength where the Nifty Bank index is concerned, at least for the day. It's doing fairly well for itself. 0.5% higher. What do you make of this move, Shivangi? Shivangi, what do you make of this? Okay. All right. Kunal, what do you make of the move?
In terms of the Nifty Bank, yes. I believe, I think it's an indication that we are looking at rollovers being on the more positive side because the Nifty underperforming or at least remaining flattish and the Bank Nifty outperforming, that too at a point when the other PSU banking names and few of the private sector banking stocks in the last half an hour have picked up pace, indicates that this is more of short covering, which I think is a positive because, if more number of shorts gets covered from this particular index, you might have an overhang being lifted from the banking index, which I believe would be very positive for the overall market sentiment and the benchmark Nifty.
Okay, PSU banks, IOB, Maharashtra Bank, Indian Bank, all of them are doing exceedingly well for themselves. Any strength on the charts? Do you believe, yes, PSU banks have done well over the course of the year, but it's been a staggered move. We've not seen such high moves on something like an IOB, a 6% uptick over here. You're reading here?
I'm very bullish on the PSU banking name, and my sense is that going into 2026, this could be a sector which I would probably, have an expectation of could deliver at least 15 to 20% on the upside, even from current levels. So that's why I would believe that, any kind of a decent correction, like a 5% to 10% broad correction in many of these PSU banking names, I think should be taken as a good opportunity. So we've been bullish on the likes of Canara Bank, Bank of India, PNB, etc. Maharashtra Bank today, I think, is up some 5-6% so far, touched the levels of 60. That's another name to look out for. So bullish on the PSU banking names and expecting that for the next 3 to 6 months at least, we could be looking at a 15 to 20% upside.
Okay, Hyundai Motor, there's the latest flash on your screen. They've entered the commercial mobility segment. They've launched Prime Taxi. They've launched a Prime Taxi range. They've launched Prime Hatchback and Prime Sedan. That's what they've launched. Yes, let's pull up the stock. Well, you're seeing a bit of a weak chart where the stock is concerned as a result of this. We've slipped nearly to the day's lows, 1% lower on Hyundai Motor, and we will keep you apprised of the details as they start to trickle through. With regard to auto, Rajat, do you have a view on what part of auto would you like to play at this point? Would you like to play the PV, the two-wheeler, the CV? And what is your take on CV? Because we're likely seeing a very sharp upcycle already. Would you like to play through the OEMs, or would you like to play through the auto ancillaries? I beg your pardon. Or would you like to play through the OEMs?
To be honest, I've not looked at the auto sector for a while. I have Tata Motors in my portfolio. That was, that's a stock that I've been holding before it got demerged into two companies. But that's something I keep holding. I am actually quite positive on the EV space growing with everything that's going on and the government pushing that. So I think companies which are in EV, whether it's two-wheelers or four-wheelers, if you had a 5-7 year perspective, you can see what's going on, no GST or 5% GST on those vehicles, government encouraging them. So whenever there is so much push from the government side, it's just a matter of time before that space starts doing well. So when you look at EV space, pretty much everyone in the two-wheeler space has already, adopted to EV. And in four-wheeler space, I think Tata Motors clearly is the front runner in this space, Tata Motor passenger vehicles. So these are, some of the stocks that I think you can add to your portfolio. Tata Motors, both commercial vehicle and passenger vehicle. I have it, but again, I've not looked at this sector in any great detail recently that I can talk about it.
2% higher on the Nifty metal, Kunal. Jindal Stainless, SAIL, Nalco, Hind Copper we've discussed, and we've taken your view in the morning as well. But what about the others? Any favorites within that pack?
So, in terms of the best performing stock, Vedanta is the best performing name from the large cap metal pack. But then I think you are also seeing signs where Jindal Steel, Tata Steel, they are trying to make a comeback for themselves. Individual charts for these stocks are very strong, and we are looking at a breakout of sorts for these names, especially from their swing resistances. And that I believe could be a very positive sign for the entire sector as such, because right now you're not just focused on one or two names. Till maybe last week or the week prior to that, you had just maybe handful of stocks like Vedanta, which was trading at a very strong degree of momentum. But right now you have names like Hindalco, Jindal Steel, even JSW Steel has managed to pick up good pace from its recent swing lows. Tata Steel has done phenomenally well to try and come back from that 160 levels to 172 plus mark, where it's trading right now. SAIL, I think for the second or the third day on a trot, you're seeing some decent price gains for the stock price. So I think all of that augurs very well for the entire metal sector.
Okay, so that's the take on metals. Kunal, I don't know if you track this stock. It's Force Motors and it is the top Nifty 500 gainer in the year gone by. I'm sure you do it. Force Motors is up 205%. Your take here? Yeah,
it's a very bullish chart. And in fact, there was a point where Force Motors went down 20%. I think it was in the mid of 2025, August, September somewhere, where the stock had fallen down from 20,000 levels to I think 16,000 odd mark, or maybe lower than that. But then the way the stock has managed to show signs of recovery indicates that we are looking at a major trend building up. So extremely bullish on Force Motors. My sense is that the stock from current levels could easily surpass the previous highs of 20,000, 20,500 plus, potentially the start of 2026.
The other sector that's rallied, Rajat, is the defense index, but we're seeing a bit of a cool off on that. In fact, the past few months, we've seen 3.3 lakh crore worth of proposals being passed by the Defense Acquisition Council, and you have a slew of beneficiaries within that defense pack. How are you viewing this pack? Because we've seen that run up. Now we've seen the valuations rise. Focus shifts towards execution. Can they really deliver with regard to the hype that's been created?
Short answer, yes, the companies will deliver. But from my, for your perspective and the perspective of a lot of people who watch your show, I think nobody will make money here. The reason I say that is because, when I look at the valuations of a lot of these defense companies, Bharat Dynamics, Bharat Forge, Mazagon Docks, Bharat Electronics, Hindustan Aeronautics, so a lot of these companies, they're all trading at valuations. India and Pakistan are not going to war every day. And I think sentiment drove the prices of a lot of these stocks to a value or to a level where it seemed like these are the everyday gadgets which everyone will play with. So yes, there is a need. The government has allocated 79,000 crore or something. A lot of this money will come to a lot of domestic companies as well, in addition to foreign players who will supply these things. But no matter how you look at it, it's going to be a while before, these companies start justifying the valuation at which they're trading. If you look at the last 5-7 year chart of these companies, they've run up like crazy. And these are very, very good companies, solid businesses. If you want to buy and hold for a very long term, definitely you will make money. But right now, to add or take position in this, despite the recent fall, I don't think so, because I looked at defense sector very closely and I thought, yes, some very interesting things are happening here, but the valuations just don't justify adding capital into this sector.
On defense, and yes, that 79,000 crore rupee that we saw, the green flag coming in from the Defense Acquisition Council for the procurement for our Air Forces, Army and Navy. It seems like the street had largely penciled in this amount because we were hearing that this amount could be around 80,000 crore rupees, and that's exactly where it came in at 79,000 crore rupees. But Kunal, let's talk about some of the shipbuilding names. Mascot Dock, Cochin Shipyard, you have GE Shipping, Garden Reach. Some of these names have done exceedingly well, but in the last 2-3 days, a little bit of a pullback. Good time to buy a buy on dips case here?
No, I would believe that the first bout of recovery will happen on the likes of BEL, HAL.
Okay.
If the sector has to go into a revival. So if you're looking at a first indication of a bet, then I would believe Bharat Electronics, Bharat Dynamics. I'll probably add that also, and I think HAL. These are the top 3 names which could probably be considered to be the leaders which could probably revive the sector. And once these stocks, they move up, say, by a margin of 5% to broad 10% on the higher side, that's where the underperforming names, the shipbuilder stocks, they would try and play a catch up, because the volatility for the shipbuilder stocks is very much on the higher side. Like for example, yesterday or day before, till last week, you had seen Mascot Dock, GRC, etc. They had recovered almost 5% to 6% from their recent swing lows. And today, you're seeing on intraday basis, there was a point where Mascot was down 3% to 4%. So it tells you that the beta of the stock is very much on the higher side. And generally, for high beta stocks, they don't form bottom unless the leader from the entire sector goes into a more of a recovery phase. So that, I believe, could be a signal which one has to watch out for. So bullish on BEL, Bahar Dynamics and HAL at current levels. And my sense is that we are looking at a point where many of the defense stocks, which have corrected by 10 to 15% from their 2024 highs broadly, I think are attractively priced.
What about IT, Kunal? That's the other culprit for the day. 1.8% lower on Coforge, Emphasis also under some bit of pressure. Tech Mahindra, Infi, all of them trading in the red. Good day to trade?
Yeah, good day to start nibbling into the IT stocks because it's the 5th consecutive day for the Nifty IT index to be on the downside. We've retraced from 39,500 on the Nifty IT index to now just about that 38,000 mark for the index. And it's a good sizable 3%, 4% correction for the index at large. Many of the larger cap names, I was looking at the charts for TCS, Infosys, etc., they are trying to come back closer to their 200-day moving averages. That makes the trade a lot more attractive for these stocks. But the only case is that the only change which has happened this time around is that the likes of Coforge, Persistent, etc., which were the best performers in the mid-cap IT space, these stocks have gone through a very high-paced correction in the last 1 to 2 weeks. So maybe I think that these stocks would try and take some bit of more time to make a comeback. That's where I would believe that the mixture of the IT stocks could change. But right now, at current levels of 38,000 thereabouts on the index, it's an attractive level to go for a contra buy.
Okay, contra buy on IT. Kunal, I have a very interesting question for you, given that we have only one more trading day of this calendar year left. I'm going to throw some names at you, some stocks that are at their all-time high. It's Nalco, Hindalco, Shriram Finance, Ashok Leyland, City Union Bank, Laurus and Maruti. This time next year, when we're sitting at the exact same place and talking about some of the stocks of these likes, which one do you think will still be in this all-time high list?
This is a googly.
I thought she told you about this.
No, I didn't. No, I didn't.
If she knew about it, then yes. But difficult to say that which stocks and sectors. But from an index perspective, if you ask me broadly, I believe that potentially next year by December 2026, we should be almost on the Nifty at closer to 30,000 for the index. So give or take, there will be sector rotations will keep on happening. Underperforming sectors like private sector banking names, I strongly believe that it's a very good time to try and chip into this sector because you can't have the index rallying up higher for a long period of time, leaving behind private sector banking names. There was a point where IT stocks underperformed and the Nifty was rallying continuously and the Nifty IT made a comeback even though the fundamentals of the news flow did not improve significantly. I strongly believe that a similar spate could happen for the private sector banking names in 2026.
Okay. Sounding very interesting.
Yeah, let's go across to Ashesha for market close.
Well, yes, turned out to be a subtle trading session. We have barely seen any action on the index level. Nifty is ending just about 15 points higher in trade today, near that 25,957 mark. We are trying to inch closer to that 26,000 mark, perhaps in the next 2 days or so. Nifty Bank, meanwhile, ending the day with an uptick of 0.5% in trade, outperforming Nifty 50 index, that one at 59,250. Auto, IT and Realty, those three indices flashing for you on your screens. Nifty Auto Index bucking the trend in an otherwise weak market. Nifty Auto Index is ending 1% higher. IT and Realty stocks, however, were under pressure today. That's Nifty IT Index for you, down 160 odd points, and Auto Index, as I mentioned. In fact, we had a whole host of stocks from the Auto Index which were in the top 10 gainers from the Nifty 50 pack. Something like Tata Motors commercial vehicle. We also had Eicher Motors, which were bucking the trend. Some of these stocks should come up for you on your screens. We've seen a lot of action in all of these counters. In terms of individual losers, we had Max Healthcare, which was under pressure today. Interglobe Aviation was also under pressure. Eternal or Zomato. These were the top three losers from the Nifty 50 pack. That's Max Healthcare for you, down in excess of 1.5%. Interglobe Aviation, that one is down, and Eternal also ending the day with a decline of over 2%. But remember, chemical stocks were under pressure today. So something like Coromandel International was declining in trade. From the fertilizer pack, we had Deepak Fertilizer, Solar industries from the broader market was also under pressure today. Coromandel International for you down nearly 5%. Deepak Fertilizer ending the day with a decline of 2%. Solar industries also down 0.5%. A whole host of newsmakers. We had Cupid, which announced its FMCG foray in an international market. So Cupid was bucking the trend. That one ending the day with an uptick of nearly 5%. Pace Digitech and Lloyd Engineering were also in focus. But yes, on an index level, Bank Nifty outperformed the Nifty, but Nifty ending absolutely flat and inching closer to that 26,000 mark. Harsh and Snehi, back to you in the studio.
Okay, Shesha, thanks for taking us through that. Seems like all's well that ends well on a volatile day as today, the last Nifty monthly expiry for the year, and of course, the calendar year 2025 expiry as well. But Kunal, we've managed to somehow miraculously end in the green today. It didn't seem like the way we started. Your take on what the last day could hold for us, last day of this calendar year, of course.
No, I think, it's the grind for the markets in the last 2-3 months. It's tested the patience for every investor and trader, and especially I think in terms of stock specific selection, and then trying to just about adhere to your discipline in terms of trading or investing rules, whichever you follow. But I strongly believe that this is the kind of a grind which will eventually yield into breakout for the indices. Now you're looking at a point where global markets are at a all-time high for themselves. And you can't have a point where the Indian markets are left behind by a huge margin, both in terms of price as well as time. So that's why I would believe that going to 2026, the approach should be on the extremely positive side for the indices.
Okay, and with that, we're out of time on this edition of Closing Trades. Thank you so much, Kunal. We'll let you go. But from Snehi, myself, and everyone who puts this show together, thanks so much for watching, viewers. Stay tuned to ET Now. More action on the other side.
In association with SBI, the bank